Welcome to ForexTV.com. It's Thursday, February 28th. I'm Remy Hookie for your New York Forex Market Buzz. In afternoon trade as of 1:30 Eastern Time, Euro dollar is trading at 1.5224. Sterling dollar is at 1.9946, while dollar yen is at 10512. U.S. equities are in the red with the major indexes down nearly 1%. Stocks fell on weak U.S. data and Bernanke's dovish comments in his testimony today. And also at a news conference, President Bush said the U.S. economy is not headed into a recession. Looking at today's U.S. data, the Commerce Department reported that Q4 GDP was unrevised at a 0.6% annualized rate. This follows a 4.9% gain in Q3 of 07. Meanwhile, the Labor Department reported that initial jobless claims climbed by 19,000 to 373,000 in the latest week. That is the highest level since late January. This afternoon, I'm joined by Greg Michalowski, Vice President of Trading and Liquidity at FXDD. Good afternoon, Greg.
Good afternoon, Remy.
Thanks for joining us on this volatile day.
It's my pleasure.
Well, first and foremost, the U.S. dollar continues to slide to record lows against the euro. Euro dollar is above 152, earlier touching a high of 1.5229. So given what fundamentals are showing us here in the U.S., technically, what's your analysis for euro dollar?
Well, it's very, very hard to try to pick a top in this type of market, and I don't recommend it for anyone. Having said that, if you, I was looking back at a chart in the euro, and if you connect a high from February 21st on a 4-hour chart, and you connect the high from the the February 27th high, we're sort of right at that level right now, and that would be a best case, right? But if it were to go another 10 pips higher, all bets are off on that one, and it's hard to stop a train's momentum, and that's what we have right now is a roaring trade. The way that I would look at this market from a technical perspective, and trying to, there's always a temptation to try and pick a top because it's high and you're supposed to sell dear, but again, I wouldn't do that. Is to let the like a moving average tell you, or perhaps an overbought condition, really overbought condition in some of the stochastic or RSI measures. But I like to put an hourly chart up and put like a 21 bar moving average, and see if it can break that to sort of signal that, all right, it might be safe to sell. But overall, all the fundamentals in something like the euro say that the currency is going to be supported because there is a report out of Germany, the employment situation today, which was stronger than they expected, and we hear Trichet speaking about the inflation effects and how they're not going to ease policy, whereas in the U.S. we have Bernanke talking about easings and banks failures, and there's plenty of bad news coming out of the U.S., including the initial claims and the GDP. If you take out trade, it was down 0.3 last quarter. So things are not looking very bright in the U.S., and I didn't even talk about housing, and we all know about that.
Well, Greg, now that we've covered euro dollar, let's move on to price action for dollar yen. The pair has pulled back, seeing session lows at 105.09. There is plenty of risk aversion, and also there has been recent news of a financial giant laying off more workers. But what strategy do you suggest for traders who are trading the yen crosses?
Well, like you said, the risk trades, and then when we speak about them, we speak about the sterling yen and the euro yen, and some of the other crosses that have yen at the end of them. They tend to move the dollar yen down as well, and we're seeing liquidation in those currency pairs. Sterling yen went through the 50% retracement level of the last move up. That level comes in at 209.87 ish, and we haven't been able to. I would watch that level sort of as a clue that maybe well it's maybe we hit the bottom in the last sell-off, but the expectation is as long as the stock market goes down, those currency pairs follow along with it, and they end up going down. The euro yen is a little bit more supported than the sterling yen. The sterling yen is definitely the one that's under most pressure, and that's also pressure in the dollar yen. The dollar yen, we're near the lows at 104.95 that we've seen recently. So I'd be watching that level, see if that level breaks. But it's all dependent on basically the crosses, and then they're dependent upon what the stock market does, and again the fundamental news out of the U.S. It would be tough for the stock market to get any sort of move, in my opinion, higher. It may not go lower, but any rally in the stock market probably be sold off, and that should keep the pressure on some of these crosses and the risk trades, as you say.
Okay, Greg, last but not least, now that we've touched on the low-yielding yen, let's move over to the high-yielding Aussie and also take a look at sterling, both which have been advancing against the U.S. dollar. Aussie is only a few points away from hitting 95. So not surprisingly, given the bearish sentiment for the U.S. currency for Aussie and sterling, if you could give us your short-term outlook.
Sure. Well, the Aussie is it's got two things going for them: a weak dollar and a strong Australian currency. They still have been raising rates over there. They still are showing strength despite the strong currency, and so we're seeing the demand go to that currency. Not to mention, commodities are up strongly, and that benefits a currency like the Australian dollar, who was still supplying goods to China as they I think prepare for the Olympics at 8:08:08. So they're continuing to buy the commodities from them and force up the commodities. The pound sterling, it's getting a bit because the dollar's getting hit. Yesterday, the pound lost ground against the euro, lost ground against the Swissy. It lost ground. The pound versus the yen went down. So all these things have been moving. It's been pressuring, I guess, the pound sterling. Today, it's up versus it is getting a better bid versus the dollar, but that's probably more as a result of dollar weakness than necessarily strength in the UK. So it's kind of which is worse, and right now the fundamentals are pointing toward the U.S. dollar. As we get toward 200, it's still rough for the pound to get above that level, so you will probably see some offers coming in against that level, and so I think the upside is probably limited in respect to that currency pair.
Okay, Greg, as always, thank you very much for insight and analysis into the Forex marketplace.
My pleasure. Thank you for having me.
Thank you. This has been your Forex Market Buzz with Greg Michalowski, Vice President of Trading and Liquidity at FXDD. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.